Well, from London, I think the big news about Brexit is currently the fall in the currency, in the sterling. I think it's about 129 to the dollar last I looked. So we've had a major repricing of the pound based on fears that we're going to have a real dislocation in the short term around Brexit. And I guess the process was always going to be messy. It was set up this way that the negotiations were going to be largely in the public, and brinksmanship was going to be the order of the day. So in a way, none of us should be surprised to see it play out in this path, but it's a hard path. And so I think it's still a majority likelihood that they'll find a way to kick the can down the road and delay. But all of us are worried about policy errors. And I think as you see in the price of sterling, there are an awful lot of people worried about that. To us, that probably looks like a buying opportunity, because we still believe rationality will prevail, and you'll probably get a delay and a more reasonable progress at the end of the day. But it's going to look ugly for a while with a lot of brinksmanship, and so there'll be volatility associated with that.
Do you look
as a business, what we're planning on doing?
Do you look to staffing up to move people more to the Denver part of Janus Henderson? Do you look, hey, guys, it's time to start looking at Frankfurt, Germany real estate? Are you going to physically move people?
Yeah, we're going to physically move a small number of people to Luxembourg in response to the needs of Brexit. We'll probably have to move a small number of people to Dublin in response to the regulators' needs there. And those two bases will, we believe, be adequate for us. Won't be a huge move, and it won't really involve Denver. But some of the work that's currently being done in London will have to migrate both to Luxembourg and to Dublin.
You know, you've been doing this a long time, formerly obviously at PIMCO, and you're looking at a world right now that for the first time in probably multi-decades is looking at the real threat of an all-out trade war. Dick, in your long professional markets experience, how do you help the firm navigate through this kind of uncertainty?
I think the firm is really well positioned to navigate through this kind of uncertainty. We have great experts who are tracking the progress of the trade flows. I think the estimate I heard this morning was that we think it probably takes a tenth or two off the growth in the U.S. and maybe as much as half a point off growth in China. That clearly affects how we think about the investment opportunities in stocks and bonds in currencies in those places. But at the moment, we think it's something to have an eye on, but it's not yet a crisis. I guess the report you gave this morning about China's stock market being up suggests maybe they don't think it's yet a terrible crisis either. It clearly has the potential to get much worse, and none of us, I think, are that great at predicting the forward path. But I think we're well positioned as deep researchers to follow the progress of this thing, and even on occasion get in front of it. And certainly the path of international trade is one of the key features that we think about when we price our investments for our customers. So in the end, it gives us an opportunity to be great, active investors, and that's all we can ask for.
You are also an operating entity. On your earnings call, you said that performance of the overall firm is, I think your quote, Dick, quote, not where you want it to be. How do you improve performance for your shareholders?
That's fair, and it isn't where we want it to be. On the other hand, it's only been a year since the merger. We told folks it would take probably 3 to get the full benefit of what we were trying to accomplish. So we are ahead of schedule, and yet I think also we're not where we want to be. In terms of how do we deliver in the future, I think the basic package is well known. We have to deliver excellent risk-adjusted returns for our clients on a consistent basis. We have to wrap that in what we call knowledge shared, which is a relationship which transmits knowledge to our clients that makes them better able to manage in their own jobs and in their own asset allocations, and to feel empowered as a partner with us. So that's the plan.
I want to shift the discussion, if we can, to Bill Gross as well. Obviously, a friend of this network, somebody that we have done a lot of stuff together with. His performance, according to numerous reports, has not been very good this year. There's been talk of outflows as well. What's the status of Bill Gross here? Are you sticking by him?
Yeah, I am sticking by him. Bill is one of the great investors of our lifetime. If you look across his 40-year career, there have been moments when he's experienced underperformance. Those moments are the anomalies in the record. He's going through one of those moments now. Nobody's less happy about his investment performance than he is. But he's still, one of the great investors of our lifetime.
Yeah, so what has he said
he's just
to you
got to work it through
about what he is looking to do in his strategy going forward?
Well, he and I have talked about it a number of times. What he said is he's made some bad bets. He believes still in his basic presumption that inflation is not going to get out of control, and you're going to have some convergence of bond rates between Europe and the U.S. And so he hasn't lost faith in his fundamental view, but he's been wrong and wrong badly in the short term, and he's accountable, and we're accountable for that. But he's still a great investor, and I'm sure he'll come through it.